When it comes to non-PDT brokers, your options are very limited. I have an account with a non-PDT broker, and it's not an account that I really use very often. I only use it when I'm doing small account challenges. Like in 2017, when I did a small account challenge of trading with $583.15. I used one of these offshore brokers. So what I want to do is I want to break down for you some of the info about the broker that I use. And by the way, I don't have any affiliate relationship with them. So if you use them, that's fine. If you don't use them, it really doesn't make any difference to me. And in fact, for 95% of you, this broker's probably not going to be the right fit. So what are the things that you want to know about it? Well, let's talk about it. We're going to talk about the minimum account size, the fees and commissions, the platform you can use, availability of shorts, the hours that you can trade there, and I'll answer a few other questions that some of you guys have asked about non-PDT brokers. The name of the broker that I have an account with is CMEG Capital Markets Elite Group, and they're located in the Cayman Islands. This is the broker that a lot of US residents will use. What's interesting is that if you go to their website, the first thing you'll see is this pop-up that says, "We do not solicit US residents. We are not a registered US broker-dealer." And they have to say that. I think that's the rule. They have to say that. Of course, if they were a registered US broker-dealer, they'd be required to enforce the $25,000 PDT minimum amount. So they make that very clear. One of the things for international traders, if you're an international trader, a non-US resident, you may want to open an account so you can trade the US market. And if you went to any US broker-dealer, and a lot of them will open accounts for international traders, well, you'll find out that you are also required to maintain that $25,000 minimum. It doesn't matter what country you are from or what you live in, those broker-dealers enforce that rule upon anyone that opens an account there. So for international traders, you actually have a few more choices when it comes to broker-dealers that do not enforce the PDT rule. The broker-dealer that you could look at is TradeZero. TradeZero is nice because they have a commission structure where as long as you use a limit orders, you have no commissions. You pay no fees. And then if you're taking, so in other words, this is the maker-taker structure with commissions. So if you put an order out, it doesn't execute immediately, then you're adding liquidity to the market. The broker-dealer receives a rebate, and so in exchange, they're able to basically give you free commissions for those types of trades. But if you're using marketable orders, where as soon as you press the order, the order gets filled immediately, that means you're taking liquidity and you do pay a commission. So a lot of international traders will use TradeZero because their commission structure is more favorable than CMEG. So in this episode, we're going to really talk about CMEG because that's the broker that most traders are asking me questions about. If you're interested in TradeZero, I'll do another episode where I talk specifically about brokers for international traders, and TradeZero will be on that list. Okay, so CMEG, let's start at the top. What is the minimum account size? The minimum account size is $500. So you can open an account and start trading with $500. Obviously, at a US broker-dealer, $25,000 is a lot of money to come up with. And I kind of have this belief that a broker like CMEG is a tool. And it has risk. And you have to do the risk-reward analysis yourself to decide whether or not it's worth it. As I mentioned at the beginning of the video, I don't think it will be worth it for most traders. The account size being really small is great, but the fees are higher, and that's where you're going to find a problem. But let's just talk about the account size for a second more. So one of the things that I often think about is that as a beginner trader, you should always trade in a simulator before you put real money on the line. You've got to prove profitability, because once you open an account with a broker like CMEG, the commissions and the fees are going to start adding up right away. And those are going to start eating away at the balance of your account, especially if you start with a small account. So I think that trading in a simulator is first and foremost, and then funding the real money account. And I do like the idea of funding smaller accounts because, look, you're going to be a beginner trader trading with real money for the first time. You're going to make some beginner mistakes. And doesn't it make sense to do that with a $500 or $1,000 account than with a $25,000 account? A beginner mistake could be you mean to buy 100 shares, but accidentally you buy 10,000. And if you have the buying power, that order is going to execute. And just like that, you could lose 5 or 6 grand, right? 20% of your account is gone. Now, that's not going to happen if you have a smaller account size and you don't have as much buying power. So I sort of feel like small account brokers or brokers that cater to small account traders and non-PDT traders, there is a real value in using that tool Again, you have to make the decision for yourself whether or not it makes sense. So from account size perspective, your minimum account size is $500. That's contrasted against the minimum account size in the US, which is $25,000. All right, so that's a huge difference. Now, there's another difference, and it's leverage. In the United States, we get 4 times leverage. So if you fund a $25,000 account, you have 4 times buying power, which means you could buy $100,000 worth of stock as a day trade. And that's what I mean, where a beginner trader with a $25,000 account can make some pretty big mistakes. But at CMEG, they actually give you 6 times leverage. So you've got 6 times leverage. So with a $500 deposit, you could trade with up to $3,000. So $3,000 of stock you could buy. However, what's interesting is, and a lot of US brokers will do this as well, they restrict margin. So a US broker will show you a stock, maybe like, I don't know, Ford, and they'll say, yeah, you can go ahead and buy $100,000 of Ford stock, and you can use your full 4 times leverage on that. But a small cap stock, a penny stock, they'll say you can't use any of your leverage on that. Or maybe you can only use 50% of your leverage. So you could only buy $50,000 instead of $100,000. CMEG is the same. And the reason brokers, both US and international, enforce these different margin restrictions is ultimately because they're trying to manage risk. They don't want to have a bunch of traders that use 4 times leverage and go short on something like GameStop, for instance, and end up blowing up their account and then owing money back to the broker. Because that's what happens if you trade on leverage and you lose. You owe that money back to the broker. Now, naturally, the ability of a US broker to enforce that, certainly a big broker, is going to be a lot better than most likely an international broker, but it's still something you have to take seriously. So minimum account size, 500 versus 25,000, leverage 6 times versus 4 times. So this all sounds appealing. Well, let's talk now about the fees. The fees at CMEG are substantial. You're going to pay fees when you put money in. You're going to pay fees when you take money out, wiring fees in, wiring fees out, and you're going to pay monthly platform fees. That's your fee to use the trading software, which we'll talk about in a second. It's usually between $100 and $150, depending on which platform you use. They have a couple options. So you're going to pay your monthly platform fees, and then you're going to pay commissions on every trade you take. So essentially, in your first month, you're already definitely out of pocket at least $150 or $125, even if you don't take any trades at all. That's just your platform fee. And well, don't forget about, I guess, the wiring in fee. So if you actually started with $500, by the time those fees are taken out, you're already down to like $350. So ultimately, it's a $500 minimum, but you really need to put in a little bit more than that. Now, the commissions this is a sticky subject because in the last year, there was a change in the way the commissions were calculated. With US brokers, every US broker that I've ever had, when you send an order, let's say you send a buy order for 2,000 shares, what sometimes happens is that order gets filled in like 4 or 5 different executions. So just the way your order gets sent out to the market and gets back with fills can have like 5, 6 executions, whenever it is. And that's fine. You bought that many shares and you just filled at slightly different prices through different market makers. Well, CMEG has now said that you pay $2.99 for each execution, not just for one trade, for each execution. Although they say on their website up to a maximum of $12.99 per trade. But let's be honest, $12.99 per trade, if you're buying 100 shares or 200 shares, that's a lot of profit to be giving in the form of commission. So the fees really do add up. And the fee, so you've got your fees for execution, you've got your platform fees, and then of course you have fees when you borrow shares to the short side. And so for that reason, the way I sort of think of CMEG is that it's a tool that is very expensive to use. So if you're going to use it, you need to be pretty confident that you're going to be able to maximize on it, right? That you already have a strategy that you trade well because you've been practicing in a simulator. That you're going to use this tool for a limited period of time while you build up your account so that you can then fund an account with a US broker-dealer where you might have free commissions, like with TD Ameritrade or Charles Schwab, these brokers, E-Trade, or where your commissions will be based on per trade, not per execution. So, this is the reason why, honestly, I think that for a lot of traders, now that there's free commissions at a lot of these brokers, there's a very compelling reason to just trade with those brokers with a smaller cash account. So you trade with a cash account so you can trade as much as you want, but when you run out of cash, you got to wait for the settlement period. That's probably going to be a better way to get started because it gives you the chance to still gain experience trading with real money, but your fees are much more manageable. It's no big deal if you take a couple weeks off. It just feels like that's safer. Again, the fact is, a lot of people still use CMEG because they feel the value offering for them is compelling. The risk to reward ratio makes sense. When it comes to the trading platform, there are two popular options. You've got Sterling Trader and you've got DAS Trader. They are both very similar. They're lightweight software that runs on your machine. This is Windows-based software, and they've both been around for a really long time. It's kind of like comparing a Toyota and a Honda. They're economy, they're very utilitarian, they work well, they're priced similarly. They function basically in the same way. I have used both with real money, and they're both fine. So whichever one you use is your call. They're priced similarly. So if you're already comfortable with one of them, then just continue to use that. If you like the other one, then use that one. It doesn't really matter. If you're coming from a broker like ThinkorSwim, it's a lot different than ThinkorSwim. It's more similar to E-Trade, but in any case, it's software that is very straightforward to learn how to use it. So that shouldn't be a big hurdle really for anyone. So those are your two choices, DAS or Sterling. When it comes to availability of shares to borrow, CMEG actually has a pretty good inventory. So that's something that's nice for short sellers. Although when it comes to the top brokers for short selling, CMEG is not on it. Top brokers for short selling include Cobra, Guardian, Centerpoint, and TradeZero. CMEG the fees are a little expensive on the borrows and they don't have as many locates. So it's not going to be on the top four. The fifth would probably be Interactive Brokers. So it's not even on the top five. But again, if it's a strategy that you use a little bit, it may work. If you're an international trader and you're an active short seller, then that's just another reason to use TradeZero instead of CMEG. The trading hours at CMEG have recently changed from 4:30 in the morning to 7:30 p.m. Eastern at night. They used to be smaller trading hours, which was really tough, especially during the hot market of 2020, 2021, even tapering in 2022, because I don't think you were able to start trading before 7 a.m. So that was sort of tough. But anyways, now you can trade as early as 4:30 in the morning if you really want to. And there's not a lot going on then, but there are headlines that come out at 4 a.m., 4:35, 5:36, top and bottom of the hour, all the way to the open. So you could trade pre-market, you could trade after hours. And naturally, CMEG being an international broker does accept international traders. So if you're from anywhere outside the US and you want to open an account there, there's a good chance you'll be able to. They, of course, do accept US residents, as they say on their website. They just want to be very clear that they don't solicit US residents because they're not a US registered broker-dealer. So at the end of the day, you have to make the decision of what's right for you. I feel like my job is to inform you of these various tools that are at your disposal, but you have to make the decision from a risk-reward standpoint. Personally, I really think that there's such a compelling reason just to use free commission brokers when you're getting started. That's really the safer place to start. You've got no commissions, you've got no platform fees, you've got insurance because they're US broker-dealers. It's easy to fund the accounts. It's easy to get the money out. It just seems like that's the way to go. But when I did my small account challenge, I was in a place where I knew, give me this tool and let me see what I can do with it. I had so many traders say, Russ, you've been trading with these bigger accounts plus, $25,000 and up for a long time. Does your strategy even work with a small account? And I wanted to prove that I believed it did. I wanted to put my money where my mouth is and actually do it. And I did. I was excited to do that. But, I hit the ground running. I had the strategy. I'd already been trading it. I knew what I was doing. So I was able to make the most of the tool and really use it to its fullest potential. So, I think there is a case for that if you've got a lot of experience in the simulator or even with real money and for some reason you had to take money out to do something and now you just want to use a small account. Again, you have to make the decision what's right for you. So If you found this helpful at all, please hit the thumbs up. If you subscribe to the channel, that'd be awesome too. And as always, leave questions and comments down below. And keep in mind that some of the figures that I gave you in terms of commissions and platform fees, those are subject to change. So you can go over to their website and check the latest at any time that you like. All right, again, hope you found this helpful, and we'll see you for the next episode right here.